Let's just jump right into the topic of the day. NFTs seem to be absolutely taking the world by storm, but I want to talk about everything from the art investor seat. I think there's been a lot of conversation from the artists and how the artists can make more money and how great this is for artists. But obviously, there's another side of the market in the art investor. And so let's maybe start at the top with just the macro argument for like why people should be looking at art in general. You know, whether it's physical art or digital art. What is your kind of thought process around that argument?
I mean, we tell investors to think about this asset class as it's one of the oldest asset classes. Sotheby's and Christie's have been around 250 years. But historically, it's only been limited to the ultra wealthy. So a lot of these paintings sell for between $1 million and $100 million. So it really hasn't been that accessible. Masterworks is the first company to really securitize a painting, sell shares in a painting so people could actually invest in them. But if you look at the investment characteristics, I mean, contemporary art post-World War II has outperformed the S&P. It's an uncorrelated asset class, meaning that it's a great tool to diversify a portfolio. So we think art has a role in almost any investor's portfolio. Historically, it just hasn't been possible.
Yeah. And so when you start to dig in, let's start with the kind of traditional art market. You talked a little bit about the outperformance of the stock market. How does that market look, including the securitizations that you guys are doing today? Are there limitations by country, by kind of wealth status, accreditation? Just what does that look like at the moment?
I mean, most investment grade paintings are in excess of probably $1 million in purchase price, right? So qualitatively, the way to think about the art market on a global basis is it's really a market where you have ultra wealthy people living around the world trading $1 to $100 million paintings with each other. And that is the $60 billion a year that is the transaction volume in the art market now. So obviously up until Masterworks, there really hasn't been a way to invest in these paintings. But we see that changing. And I know we're going to talk about NFTs, but I think that's another exciting part of the art market.
Yeah. And so today, through something like Masterworks, basically anyone with, $100, $25,000, whatever it is, they can come in and they can actually participate in these traditional pieces. And really your guys' goal is to not only get access up and kind of reduce friction, but also I know that you guys had this Banksy piece that you sold and there was a pretty nice return there. Just walk through maybe like that as an example as to how Masterworks itself works.
Yeah, so basically we go out, we buy a great painting. In that case, a Banksy painting. I think the title of that painting was Mona Lisa. We raise capital, so we sell shares to fund the purchase of that painting. And then after we sell the painting, which in that case was very fast, it was roughly I think 1 year later, we distribute proceeds to investors. So in that case, we sold the painting quickly. I think it was a 37% return net of fees. That was a great outcome for investors. You know, generally we tell people to think about investing in art as a long-term hold. 7 years, 10 years, really takes a while to generate returns. But we also have secondary markets for people out trading shares in great paintings. So that's an alternative for people that can't wait the full time.
For sure. And what are you seeing in the traditional art market around prices, given the macro environment, kind of all the quantitative easing? Are prices going up as more and more people look for store value assets?
I mean, it's a great question. So historically, we've always talked about art as an asset class as just an outperforming asset class. Like in general, again, for art created after World War II, it's outperformed the S&P by, I think, 150% from 1995 through 2020. So it's this really interesting asset class regardless. I think today we have a lot of people who are just saying, hey, governments around the world are printing money. We think inflation is going to happen. We're interested in real assets and we're interested in art specifically. So we're seeing a lot of interest. And we actually did we co-published a report with Citi, I think in December of 2020, where Citi analyzed the correlation between real interest rates and art prices. And not surprisingly, as interest rates go down, you see art prices go up. So it's a conversation that we have with investors every single day. There's tons of interest in art as an inflation hedge, for lack of a better term, right now.
I am not going to be surprised if you told me there was a big overlap between people who believe they're macroeconomists and art investors that are speculating.